Hello and welcome. You're tuned into the weekend edition of Your Trades. I'm Anisha Jain, with me Shrishti Sharma, and what a week it has been, not only for the Indian markets but across the globe. It was the softer US CPI data that triggered a risk-on rally across the globe. We saw that solid move when it comes to the US market towards the end of the week, and as a result, the Nifty 2 hit a 52-week high, while the Bank Nifty was sitting at a fresh record high. It was rupee that also was showing quite a bit of move. We strengthened below the mark of 81 to end the week with a number of around 80 on the rupee versus the dollar. In terms of the sectors, however, it was pharma as well as auto which was on the back seat, while PSU banks definitely did shine this week, Srishti.
Well, yes, absolutely, Anisha. Very good week for the Indian markets because if we see Nifty was actually up 1.3% on a weekly basis, while an outperformance coming in from Bank Nifty that was up 2.3%. But highlighting some of the sectors, so one of the lagging sectors was IT, but this week it was a good one, 3.2% of the gains, followed by Nifty Finance, which was up 2.2%. But on the losing side, Nifty Pharma was there, around 3% of cut coming in there, and even Nifty Auto was a bit of an underperformer in the week gone by. But some of the stocks to be highlighted, firstly is Britannia Industries was up 8% in this week on the back of good set of numbers. Not to forget HDFC Twins. Apart from that, Adani Enterprise was seen at record high level, around 5% uptick coming in on this particular counter, and even HCL Technologies had an uptrend of 4%. On the losing side, Divi's Laboratories, after a disappointing set in Q2, was down 13%. Power Grid Corporation and even Bajaj Finserv were down anywhere between 4 to 5%. But had to say that it belonged to the banking space, and in the mid cap gainers, if you see Union Bank and even Bank of India were seen to be topping the charts.
Oh, well, but yes, the question is, are we likely to see a fresh high on the Nifty in the coming week or not? Because remember, that level is close to around 18,600 when it comes to the Nifty, though Bank Nifty has already crossed the record high mark. Let's welcome on board Rajesh Palviya as well as Devane Choksi on the show. Devane, hi, good afternoon. Thank you so much for speaking with us. First question, are we likely to see that fresh high level? Or if not in the coming week, at least in the year, are we likely to see 19,000?
Hi, good afternoon. Well, obviously, I think the all the required constituents, I think, for Nifty to go up to the next orbit, I think, are in place already. On one side, I think we have got, I think, almost end of completion of the quarterly earnings season for the second quarter, and now I think we are also experiencing that the disadvantage of other countries is becoming advantage to India in form of, I think, bringing new money. Today, I think the option to invest money, I think across the globe, I think India remains a favorable destination given the kind of strength that we are demonstrating in our economy. With this kind of condition, and on the other side, I think some of the heavyweight sectors in the Nifty, including banking and financial, I think the Nifty's updrive is likely to continue going forward because banking and financial is suggesting that economy is basically growing and growing faster. On one side, I think up till now the corporate lending side of the book, I think was not so sure. But now I think in last one quarter or 1.5 quarter, 2 quarters, I believe that I think the corporate lending side book has started becoming very strong with 15-16% growth coming in for the larger banks. Retail lending book also remains extremely strong. Housing finance book remains strong, and the primary sector book also I think remains I think on a steadier to grow wicket. So all in all put together, indication is that heavyweight like banking sector would possibly drive the Nifty to the newer levels in coming, if not weeks, in months.
Okay, so the heavyweights are expected to lead the rally, and we are not far away from Nifty's all-time high level, that is 18,604. But Rajesh, now coming to you in this market rally, what we are seeing now is that some of the laggards, when it comes to sectors like Nifty IT, for example, have started participating in. Uh, Other than that, even Nifty Metal has been lagging behind. Do you expect the metal counters to shine going ahead?
Good afternoon. So definitely, yes, we have witnessed, strong buying action in last couple of weeks in the metal space, and looking at the setup for Nifty Metal, we feel that, furthermore, upward momentum is likely to continue. The stock like JSW Steel, Jindal Steel, Tata Steel, most of the stocks have done well in the last couple of weeks. And looking at the setup, we believe that, another 4 to 5% really we can witness in the coming trading session in the continuation of this momentum for the metal space. So we are bullish, and we feel that one can carry their trades for another 4 to 5% up move in the metal space.
That was about the entire metal space, but wanted to get a sense from you, Devane, that this week we also saw quite a bit of IPOs, right? And they saw quite a bit of traction as well. From the ones which are open currently, is there anything that you want to highlight which could see good listing gains? Is there anything on your radar?
So I think the company which got listed today probably I think is the one which one can talk about the DCX systems. Uh, the business of the company I think sounds I think extremely convincing with the kind of a focus towards the defense sector. And at the same time, I think the business is, I think, quite profitable. I saw the numbers at glance, I think, while the IPO was filed. I think was somewhere around 16, 17% kind of ROC is continuing with the company. And the growth rate, I think, assumed is on a significantly higher side. So this particular company remains, I think, relatively more stronger. And I think one could possibly argue for going into it. Even the valuation wise, I find that I think slightly expensive compared to other listed peers in the markets in the defense sector. But I believe that I think the company remains relatively a stronger one, I think, as far as the opportunity goes. The other one, Bikaji, which is getting listed, I believe, next week. I would think that I think this is a company which I think one can possibly selectively look at it if the valuation permits. The opportunity in the food and food category businesses, I think, remains, I think, extremely convincing and strong with the discretionary power also increasing. So I would think that I think any corrective price or the fall in the market would mean that I think companies like Bikaji would probably also be, I think, one to look at into the portfolio.
Just had a follow-up there, Devane. We were talking about BKG, the prospects looking good, but this week consumption was definitely underperforming. Whether it is Indian hotels, which was down reacting to its earnings trend, wherein we saw margin erosion, or Jubilant, wherein again there was a margin erosion that impacted the earnings, there was a bit of a sense that consumption was on the back seat. Do you think this is just the earnings reaction, or do you see that after that huge run-up, maybe people are booking profits?
So both, I think earning reaction had to come, and I think some amount of profit booking also has to come. I think in such kind of context which I ran up, I think ahead of the earning outlook that they probably assume. The packaged food category, in my viewpoint, along with I think the retail look that they carry, I would think that I think would be a sure shot bet to look at. Not many companies available in the horizon in the listed space though, and I think one can possibly argue that some of the packaged food category companies I think will remain relatively strong. One has seen how exactly the Britannia has performed in this week. I think after a good set of numbers, I think really the company has bounced back, I think, from nowhere. So what I'm trying to make a point is that I think the investors have appetite to add this kind of ideas into their portfolio. What one has to look at is, I think, a valuation. As long as the valuations don't become prohibitively expensive, one can gradually accumulate this kind of stocks into the portfolio.
Okay, so that's the take coming in on consumption sector. But with this, it's time to slip into a short break. But you don't go anywhere. We'll be right back with this interesting discussion lined up and more right after this quick break. Welcome back to Your Trades on ET Now. And this week, the platform stocks were in focus as the shares of Zomato and even Nykaa skyrocketed after a muted start in this week itself. But what's driving the rally? Let's understand all of that. And my colleague Vinny Motiwala is joining with all the details. Take it away, Vinny.
Both Zomato and Nykaa are buzzing in trade. And let's look at, why Zomato firstly is in focus. Obviously, the Q2 FY23 numbers that we saw coming in, we've seen an improvement coming in terms of the profitability. That means actually the losses of the company have narrowed down as well. So that is a factor coming into play for Zomato. Overall, they've delivered the second consecutive quarter of sharp expansion in terms of contribution margins as well. And clearly, we can see that the company is focusing more on profitability than growth, because GOV growth has been a bit muted coming in. Other than that, food delivery business has done quite well. Margins have seen an expansion there, while also in terms of overall the hyperpop business and the quick commerce segment as well have seen a rapid growth coming in this time around. Company has also reiterated in terms of commentary that the stance is still the same, as no further minority investments will be made anywhere, as well as they are reaching that adjusted EBITDA break-even, other than the e-commerce, in the next 2 to 4 quarters, which is what they said before as well. They're still maintaining that stance, and now they've shared a new guidance coming in of 4 to 5% in terms of EBITDA. Now, even brokerages like Goldman Sachs have given it a thumbs up. They're maintaining a buy, given a rating of 100 rupees per share. City too maintaining a buy, target price of 85 rupees per share. They've even raised their forecast in terms of the adjusted EBITDA going forward. So yes, that is a factor coming into play for Zomato. But let's move on to Nykaa. Just a couple of days back, we did know that Nykaa's pre-IPO shareholders, now the lock-in period for them had ended. So that overhang of the stock, the selling that we could see coming in, that is done now. That overhang is over. And the last couple of days, look at the move that we've seen coming in the stock, up more than like 15, almost 15-20% that we're seeing a rise coming in 20% in the last 2 days. Today itself also it's buzzing in trade, and obviously yesterday in the block deal also we had seen big names like Norges Bank, Aberdeen Standard, which have bought some stake into Nykaa as well. So yes, Nykaa as well as Zomato with that focus.
Well, thank you so much, Winnie, for highlighting all the details. But Rajesh, now coming to you, a good week for all these beaten down counters, especially if we talk about Zomato back to its October high levels. And just wanted to understand what's your take on Nykaa as well as Zomato going ahead. Do you expect this positive momentum to continue?
So if you talk about Zomato, yes, after a big correction, now stock is forming a base, and since last couple of weeks, especially in last 3-4 weeks, we have seen a very narrow price action, and now price action is suggesting that it will break out of the consolidation range. So looking at the near-term, short-term sector, we feel that furthermore upward momentum we can see in the Zomato in the coming week also, and if it continues to hold about 68 level, then possibly next target for Zomato should be around 80-84 level on the high side. So we feel that this momentum is likely to continue. And if you talk about Nykaa, still this move which we have witnessed in last, especially in last 2 weeks after a big corrective action, still stock is not that much looking great on the technical front. Till stock not crosses about 240 level, we feel that some supply pressure is likely to remain on the high side. Once stocks manages to cross about 240 level on the weekly closing basis, then possibly stock can attract some more buying action above 240 level. But till the time stock not crosses about 240, those who are a short-term trader or investor, they can take this opportunity to exit if they have bought at the lower level.
The take coming as far as Rajesh, the platform stocks is concerned. But let's take a look at the earnings that went by this week. Quite a few reactions that we saw on the likes of Britannia, SBI, etc. My colleague Asesha is joining us with the big earnings of the week.
Let's start off with the Nifty pack first. Coal India reported its numbers during the week. Although they were sequentially weak, they were largely in line with what the street was working with. Analysts do expect that second half of the year for Coal India will be better than the first half. And the cherry on the cake for Coal India is the dividend that they declared of 15 rupees per share, and hence that kept the stock alive all through the week. We also had Divi's Laboratories, which reported a weak set of numbers. The numbers were well below consensus estimates. Across the board, we did see brokerage downgrades coming in, and hence Divi's Laboratories was trading in the red in this particular week. Hindalco also reported better than expected set of numbers. Higher cost of production and lower realizations did impact the numbers on a sequential basis, but they were far better than what the street was working with, and hence the stock was reacting positively in Friday's trading session. Let's move on to other non-Nifty buzzers during the week. Then Ramco Cement reported a weak set of numbers. They doubled their capital expenditure guidance for the year, and net debt also rose by about 1,000 crores, and hence the stock was reacting negatively. We had Jubilant Foodworks, which also reported a weak set of numbers. Quarter 2 numbers did miss street estimates. Gross margins were at the lowest levels that we have seen in the last 10 quarters, and EPS cuts of almost 2 to 4% is what we saw as far as Jubilant Foodworks is concerned. Tata Motors, meanwhile, also reported a weak set of numbers, higher than expected loss, and analysts do believe that zero net debt target could now be pushed well beyond FY25, and hence that one was also reacting negatively to its numbers. Lupin, a strong set of numbers coming in over there. Company reported a profit after tax of 129 crores versus a loss of 2,100 crores same time last year. SBI, strong set of numbers over here. Profitability was fueled by lower provisions that the company did this quarter. The company has maintained a steady outlook, and strong top line growth was led by improved net interest margins and uptick in loan growth. And lastly, we had Britannia, which reported a good set of numbers. Positive growth momentum for Britannia continues. We saw strong performance across the board, and aggressive market share gains is what Britannia enjoyed during the quarter.
Okay, thanks, Asesha, for that. Devin, from the list that my colleague just highlighted, is there any company that caught your attention, or any other earnings that you would want to highlight, which probably you think could re-rate a stock or maybe derail it, whether the PSU banking name, autos, any sector?
So yes, I think in my viewpoint, Tata Motors looks, I think, interesting. If you look at, I think, domestic portfolio of Tata Motors in commercial vehicle, in form of passenger vehicle, I think both these portfolios have been remarkably doing very well. And I even Ashok Leyland result, I think, which came up, I think, which suggests that the commercial vehicle segment, I think, is in for a very, very smart recovery. Even Eicher Motors result, I think, endorses this view. So in my viewpoint, I think commercial vehicle segment per se, and I think the Tata Motors, because it is beaten down, I would think that I think it's a opportunity which is coming and knocking the door. JLR definitely I think is improving, but at the same time I think it is still a cause of worry as far as I think the near-term improvement is concerned. Given that situation too, I feel that I think the downside in the stock I think possibly is limited, and maybe I guess I think the domestic portfolio would probably move smarter for Tata Motors. Having said that, I think even the other commercial vehicle manufacturers like Ashok Leyland, I feel that I think the numbers are reasonably good going forward. Even auto space, even two-wheelers particularly have started of late showing better numbers. So yes, I think auto ancillaries, they could possibly be the ones I think where one could possibly train the focus in next 6 months. Largely because of the fact that they have been beaten down, available at a comparatively lower price to its previous highs. And opportunity-wise, I think the situation is getting better as far as I think auto is concerned. We definitely also look at, I think, banking space very, very closely. And we feel that I think some of the beaten down banks, I think, are better off. I think HDFC Bank has actually shown performance today in the trade. Similar could be a situation with Kotak going forward. So I think one could have a look at them. Public sector banks remains, I think, good. But at the same time, I think they're beaten down. So re-rating definitely can be expected on them as well. So these two places, these two sectors, I believe, that could be, I think, good to focus on, at least for the near term.
Okay, so autos and financials is something that Devin is liking, and especially Tata Motors is the counter in auto space that he's highlighting. But Rajesh, now coming to you, which are the stocks that are on your radar coming up next week?
Justly, we feel that metal space can do well in the coming week, and from that space, we like JSW Steel. The stock is showing a strength on the weekly, daily chart. It's a third consecutive week where we have seen that JSW Steel is forming a higher high formation, which is clearly sign of bullishness. So we feel that JSW Steel can continue its upward momentum towards 755, 765. One can buy with stop loss of 705. Our second stock is HDFC Bank, a strong run up we have seen in the today's session also. Stock has attracted a huge open interest addition. Now stock is well placed above 1570, which is a major hurdle for the stock. So looking at the breakout of the daily as well as weekly chart, we feel that now HDFC Bank can continue its upward momentum further higher towards 1675. One can keep stop loss of 1570. Third stock is again from the banking space, and that is RBL Bank. A very narrow price action we have seen in last couple of trading session. Since last 4-5 week, stock is now penetrating its resistance area of 141, 142. Looking at the short covering in last couple of trading session, we feel that RBL Bank can exhibit good up move in the coming week. We are projecting target of 155 with stop loss of 139.
Those are the picks coming in from Rajesh. Full tilt towards the banking space. But with that, we'll thank both Devin as well as Rajesh for joining us on the show. And it's a wrap on this edition of Your Trades as well from the entire team who put the show together. Thank you so much for watching.